Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because even with all of the extreme fear out there, the 20% crash we saw in the S&P 500, and all of the bearish propaganda scaring investors with narratives like Black Monday 2.0, the Bitcoin death cross, and US trade wars, we remained calm and collected because Bitcoin was still maintaining its macro structure and we didn't get caught up in all the daily noise. This is why we always cover multiple scenarios on this channel, even if we have a base case that we think is most likely, and the 50-week moving average has been such a cheat code this cycle because every single time Bitcoin comes down and tests it, there's a terrifying narrative that causes investors to think that a recession and bear market is around the corner and that the cycle is over. In September of 2023, the SEC went after Binance and Coinbase, and everybody became an expert on SEC law and started targeting 12K. In August of 2024, we saw the Japanese yen carry trade implosion. Everybody started targeting much lower prices and everybody became a Japanese yen expert. And even as recently as last week, Bitcoin was holding above its 50-week moving average, but all of a sudden everybody became a geopolitical tariff war expert, knowing exactly how tariffs would be implemented and exactly how they would affect the economy and exactly how low Bitcoin was going to crash. But in reality, it's so much simpler to just let the market tell you whether or not we should be concerned by seeing whether or not it's able to hold a major support level that has held up Bitcoin's price this entire cycle and the cycle before it. This is why Monday's free weekly report was called the line in the sand. Bitcoin was testing the 50-week moving average at about 76K. The S&P 500 was falling off a cliff as so many investors panic sold these stock holdings in their 401ks. But we remembered that it's only a matter of time before Trump and the Fed start to pivot their stances now that the market has shown its dissatisfaction with both monetary policy and trade policy. And just a few hours later, after so many investors panic sold, Trump announced a pause on tariffs. And just yesterday, the Fed reminded investors that it's absolutely ready to step in if liquidity dries up. Now, I had no idea these things were going to happen this way when I deployed some cash on Monday. I only deployed it because my system called for some cash deployment for this week's portfolio rebalancing. And although I had no idea if it was the exact market bottom or not, I couldn't help but feel optimistic buying extreme fear in this market climate. And if you want to learn more about my portfolio management system, you can join the Crypto and Macro Enjoyers program in the link below. There's one module left that I'm still working on, so we still have early bird lifetime access available, but that's something you can check out if you're interested. As we look forward, my base case remains that Bitcoin will hold support at this green support region where we have the 50-week moving average, we have the March swing high, and it's a standard 30% correction in a Bitcoin bull market. And for all of the investors waiting to hold hands and go all in the 60,000s, I'm not convinced Bitcoin will go that low, especially with what we've been seeing from global liquidity. Now, this entire cycle, Bitcoin has followed global liquidity with a lag. Some people say 75-day, like myself. Sometimes it's about 10 days more, 10 days less, sometimes 15 days more, 15 days less, but it's roughly around 2 to 3 months generally. And for the first time this cycle, we have a new all-time high breakout on global liquidity as of this week. This is incredibly bullish for Bitcoin because global liquidity led it on the way down in 2022. It pulled Bitcoin out of the bear market in early 2023. When global liquidity went down in 2023, Bitcoin consolidated. After global liquidity rallied higher, Bitcoin followed suit. When global liquidity went down in 2024, Bitcoin followed and consolidated. It then broke out in late 2024. And what do you know? Bitcoin followed once again. And we warned about the global liquidity downtrend from December to early January. Bitcoin then entered a consolidation period. And now we have the strongest breakout on global liquidity so far this cycle, and I have a hard time believing that Bitcoin won't follow. And now this breakout in global liquidity is driven by the breakdown in the US dollar index. This is the lowest reading we've seen since April of 2022. And we know that the last few times the US dollar index has had these major breakdowns, it's resulted in huge rallies from Bitcoin. And I don't think this time is any different. This article talks about how Bitcoin is preparing for up-only mode. I don't know if that's what I would call it, but the amount of sell-off we've seen in US bonds, the worst one since 2019, and the weakening of the US dollar, this is the exact currency debasement backdrop that Bitcoin was created for. We're seeing the market pricing in more and more rate cuts with all of this macro uncertainty. We're seeing a major cool off in inflation, which gives the Fed more room to cut rates. Our leading indicator for inflation, Trueflation, is telling us that inflation is headed lower. As for the labor market, it is weakening, but it isn't falling apart quite yet. But this is going to give the Fed more room to ease as well. Our leading indicator for the unemployment rate, initial jobless claims, which is a proxy for the number of layoffs, doesn't look too bad quite yet. So I don't think we're on the verge of any type of major recession. And of course, the major drop we've seen in the S&P 500 is giving the Fed some room to ease up a little bit on their hawkish stance as well. So we'll see what happens. To me, Bitcoin is still nicely in our fair value range. It's not a huge discount by any means, but at least you're not buying at a local top. I do think that we've seen an incredible sentiment reset that we were calling for over the past few months. Investors completely threw in the towel, and we've seen extreme fear twice now in this market, and that's resulted in a huge deleveraging. We've seen a huge drop in the amount of leverage being taken by investors. And now Bitcoin is significantly de-risked because so much of that leverage has been washed out of the system. And we're seeing quite bullish price action with the false breakdown that we had on Monday, liquidating the longs and going below the past two swing lows. Usually when you see a false breakdown at the bottom of the range, your next target is the range high, and we'll see how Bitcoin reacts there. But as of right now, this is an incredibly bullish weekly candle if Bitcoin were able to close around 84,000 or 85,000 or even better above those prices. And we still have a lot of bullish narratives brewing. I know many investors have been ignoring them because of the fear and uncertainty with what's happening with macro, but we're still seeing this trend of various states talking about digital asset freedom and Bitcoin reserves. We saw a North Carolina lawmaker introduce a Digital Asset Freedom Act. We also have Bitcoin reserve bills advancing in New Hampshire and Florida, and we had a New York bill proposed legalizing Bitcoin and crypto for state payments. And again, as I always say, even if these things don't happen tomorrow, the fact that they're even being proposed and introduced and discussed is completely different from how this asset class was treated even a year ago. So we'll see what happens. Bitcoin was able to hold major support, and many investors capitulated earlier this week while the S&P 500 was crashing and everybody was talking about a Black Monday. But as of right now, this looks like a perfect bull market retest to me. As long as Bitcoin maintains above 74K, I remain bullish that Bitcoin is going to head higher. And speaking of heading higher, we're finally seeing some signs of life with Ethereum having a false breakdown below its old mid-range and getting below all of those previous swing lows from September of 2023. Breakdowns and reclaims tend to be pretty solid reversal patterns. Now we do have to wait for follow through over the next 2 weeks. But as of right now, this is nice that we're seeing finally some signs of life for Ethereum now that everybody has capitulated. It could be because the SEC approved options on the spot Ethereum ETFs, and rumors are starting to brew that Ethereum ETF staking could come as soon as May. And this could be a great catalyst to turn sentiment around. If ETF buyers can finally get some yield on those Ethereum holdings, we know investors, especially institutional investors, love getting yield on their assets. And as of right now, Ethereum ETF buyers have just been giving up those additional yields. So this could be a nice catalyst for Ethereum. And we're seeing even more strength from Solana. Big false breakdown here below the range low it's held for the entire cycle. Liquidate absolutely everybody, get a beautiful bounce off the 200-week moving average, and now it's trying to reclaim that range low. If it is reclaimed, I think Solana could go back to the mid-range very quickly, and then we'll have to assess from there what comes next. But it is nice to see some relief across risk assets, seeing some bounces across the board. Bitcoin was very impressive throughout the S&P 500 sell-off, but we don't know if we're out of the woods quite yet in the short term. But as we look forward, we know that these federal deficits are only going to get larger, and that trend is a trend that's been underway for decades now, and I don't think it's going to reverse overnight. And exponential debt growth means exponential money supply growth and exponential currency debasement, which is why we see exponential appreciation in risk assets like the S&P 500 that investors use as a store of value to protect them from currency debasement. And it's why I'm especially bullish on fixed supply risk assets like Bitcoin and its sole purpose to protect investors from currency debasement. But as always, let me know what you expect. We saw so many investors flip bearish on Monday when Bitcoin briefly traded below the 50-week, and we saw that big sell-off in the S&P 500. Now that that was a confirmed false breakdown, we're seeing so many investors flip back to bullish, and I'm sure so many people have lost so much money trying to leverage trade this chop and this very tight Bitcoin range. I prefer to zoom out and focus on the big picture and focus on the various cycle scenarios instead of trying to trade day-to-day swings, which are almost completely driven by headlines and narratives. But we'll see what happens. As always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.